Welcome to the Stay Ready Real Estate Podcast, where we stay ready so you don't have to get ready. I'm your host, Emeka. And what this podcast is all about is letting you know that regular people like you and me can invest in real estate to become wealthy. You don't need millions and billions of dollars to invest in real estate. You can actually invest in real estate with little to no money down. I'm just here to let you know that as long as you have time and can take action, you can become wealthy. And all it takes is a couple of years for you to honestly become financially free. So tune in. Hope you enjoy.
What is going on? It's your boy Emeka here. And today, what we're going to talk about on the lovely podcast is real estate versus stocks. So, number one, I'm just going to say there is no right answer. I'm going to tell you up front, there is no right answer because that answer depends on where you are in life, what you value, what's important to you, how much time you want to spend. And I'm going to elaborate here. Another disclaimer is I'm biased, forcing me to choose real estate. And I think I'm choosing real estate for the right reasons. And if someone wants a definite answer on, what I will tell them to do, I'm choosing real estate all day, any second, any month, any hour. You get where I'm going here. And I'm gonna tell you why. Because I'm 29 and the reality is I have plenty of life left. And if I am wanting to retire early, if I am wanting to, have the option to do what I want, when I want, put my W-2, if that was even something that I was even thinking about, I want to do it by 40. And I'm not sure if I can do that with stocks. I'm not sure anyone can do that with stocks unless you're truly active and truly know what we're doing. And I would argue that most of the people who are watching this podcast, most of the people who are listening to this podcast have no idea where their money is going when it comes to stocks. And when I say stocks, I mean that generally, because there's just people in the world who say, well, stocks is index funds or I don't know much about this stuff, right? Stocks and then index funds and mutual funds are all different, but they're all same to me, right? So why do I believe that real estate is better? Number one, you get paid three ways, right? One is cash flow, the monthly income that you make. One is appreciation, the average that the house's value increases on a year-to-year basis. So if I were to buy a house for 100,000, well, my debt is going to stay the exact same, assuming that I'm buying on a fixed rate, meaning that like my monthly payments be exact same. So even though I buy it for 100,000, next year that house could be worth 110,000. And the following year it can be worth 115,000. And then it could go down 109,000. But then the next year it can be worth 130,000. So without you truly doing anything to the house, you're going to get a return strictly off of the appreciation. And then the third way you can get paid is through the debt pay down, right? So if you have someone renting your home, that means that you are not paying the principal and interest that is required to own a home, assuming that you do not buy it cash. So you have appreciation, cash flow, and debt pay down. And how are you getting paid with debt pay down? That's because your equity is increasing. So your equity is not only increasing through appreciation, it's increasing through your tenant paying down your mortgage. And then after 30 years, assuming that you were to keep the property that long, someone else could be paying for it. And then let's say you have to come out of pocket $100 a month for $100,000 investment. Let's say $300,000 investment, right? You're essentially paying $100 a month for someone else to pay you, let's say, or pay the mortgage $2,000. So even though you're coming out of pocket, spending money, $100 a month, the debt pay down and the appreciation supersedes that tremendously. So tell me what investment class can get you paid three ways. And we're not even getting into the tax benefits, right? And, you can make it more passive than not. just by hiring a property manager, right? Just because I say more passive was passive, but you can make it ways where you don't have to put so much sweat equity into it. Now let's talk about stocks. It's pretty simple. You put money into the stock market, but you have no say what that business does unless you're like Berkshire Hathaway who can, buy a bunch of shares and basically own the company. There's not much control you have. And on top of that, once you spend money on stocks, if you want to take out any profit, you're going to get a tax hit, right? So what can you do with that money until you hit that certain age, which I believe is either 55 or 65, one of those. You really can't do anything with those funds, right? So if you're investing in the stock market, yes, there's going to be, decent returns, which I believe the average is roughly about 8% annually. You're going to make decent returns just putting your money in the market. In Yes, that's okay. Yes, it's not bad. But compared to real estate, how can it be better if you can't use that money now? Right? I know plenty of people my age, older, who have made a killing and made a fortune. Maybe not a fortune, but they made a lot of money on strictly just in NVIDIA, right? AI is huge. NVIDIA is building the infrastructure for AI and the power. Hopefully I said that right. I don't look into that stuff. Um, Regardless, they made a lot of money, but what are they doing with it? They're not doing much with it besides investing it somewhere else and, just watching it grow, right? If you're into it, you're not really taking that out. If you're taking that out, you're going to get hit with taxes. Had an argument with someone regarding that, and they were older than me, and they're not going to get hit with those taxes because they hit that benchmark. But they've also never invested in real estate. So I can't take anyone seriously who isn't investing in real estate, especially if they're going to try to talk down on a pure point blank. If they're not doing it, how can they tell me if it's good or bad? I have investments in both, and that's why I feel I can talk about it and talk to you about it. And I've looked at the annual returns between my stocks, my 401k, and my real estate, right? And I have a real life example, right? I put money into a flip last year, sold it in January. And on average, me and my partner made a 30% cash on cash return each. Boom. 30% cash on cash return. And then I had a financial advisor, and they put money, they handled the money, they allocated wherever they did it, right? I don't really know. That's what I paid them for. And they gave me a 12% return. Now we have real estate, 30% return. Then we have stocks, 12% return. It is obvious who is the winner, right? Since it was a flip, we will have to pay taxes on it. But I'm not even including the tax return that we got from spending the money on the materials to fix it up. So the biggest thing that I haven't talked about, which I'm not trying to sugarcoat anything, is it's very active, right? A flip is active. I spent, a good amount of time, a good amount of days going to the property, certainly just checking in on the contractor, making sure they're doing what they're supposed to do, checking in the progress, getting updates, dealing with surprises, et cetera, et cetera. And that takes time and effort. I'm 29. That's okay. That means nothing to me. But if you don't want to do that, then you should not be in real estate or doing flips. So when it comes to just an annual return, right? I did that flip in 6 months. 6 months, 30% return. So if I were to double the months, right? That's 12 months, potentially an even bigger return. And it's a no-brainer all day. And I get to use that cash immediately. I need to put it into the stock market. I could put, half of that in the stock market, half of the profit in the stock market, or put it into another deal to make another 30% return, which I did, right? So the return is much bigger, but it requires more effort, more people. And let's say it is more risky than the stock market. But just because real estate can be more tricky, more risky than the stock market, doesn't mean the stock market is not risky. Because at the end of the day, you have no control over what happens. whenever, whatever, whatever you're investing in, right? People who are investing in video. There's a war in Iran and Israel right now. I believe it's Iran and Israel, but there's a war right now. And people who invested in oil, that those stocks are kind of plummeting right now. It's going to come back up like it always does. It's just like real estate. But now you have to wait. You can't just, I mean, you can just pull it out, but you can pull it out at a loss. And on top of pulling it out at a loss, you're still going to get hit with you're still going to get hit with taxes if you made money over time, right? And when I say a loss, right, let's say it went up, 50%, now it went down 20%, you might have, you might have profits, but even though that's a 30% return, that's not including the tax hit that you get hit with, right? And I pulled out money from my stocks and I got hit with taxes. When I moved to Florida, it was a tough time, right? And I had to do that just to, pay bills. So I'm telling you by real life experience, and real estate typically comes out on top. And I just gave you a scenario where you can still make money even if you are not cash flow. So how can someone tell me that stocks is better? They can't. I've done both, and there's an easy winner. But at the end of the day, I am willing to put in the sweat equity. I am willing to put in the time it takes to, execute on the business plan when it comes to a real estate investment. And not everyone wants to. And that's okay. And that's why I said at the very beginning that there is no right answer unless it's real estate. Wait. But if you want to do something with the cash, you want to do something with your investment sooner than later, then real estate is the way, period, point blank. Real estate is a tangible asset. When things go wrong, which let me rephrase, not necessarily when things go wrong, but when inflation is rising, it's typically better to have an appreciating asset because that is something that you can touch. Those assets usually go up. Think about gold right now. Today is Wednesday, May 6th, 5:31 p.m. And gold is doing great. There's a war going on, prices are high, blah, blah, blah. And gold is going up. Even though the real estate market is not necessarily the same right now, but that has nothing to do with the inflation. That has to do with, COVID, prices are being high, and there's a bunch of inventory here in Florida. But if you go to Kansas City, the market is still doing okay. So when it comes to real estate versus stocks, there is no true winner because it depends on who you are, where you are in life, and truly what you want. If you want bigger returns, if you want to use cash now, if you want a tangible asset, if you want to get paid 3 ways, if you want to, have tax benefits, which we don't really get too deep into, then real estate is your answer. If you want something more passive, something you have less control over, and something that you're just willing to wait and let, just let it grow and let the power of compounding happen and make money on the interest that you've already made money on, then okay, yeah, sure. Stocks is ready. Stocks is good for you, but you just can't do much with it. Right. So when people come to me and tell me that stocks is better, they have no idea what they're talking about. Right. They have no idea. Even Warren Buffett, if you listen and go on YouTube and listen to what Warren Buffett says about real estate, he doesn't really get too much into it. He says stocks is easier, which they are, because all you have to do is buy something with the click of a button. And what he says about real estate is it's not necessarily a bad investment, but it is a harder investment. There's more people involved. There's more variables that could hurt you if you have a bad tenant, if you have a bad property manager, et cetera, et cetera. All those things are true, but if you actually look into what Warren Buffett is investing in, he's investing in Clayton Homes. He's investing in insurance and house real estate. He's investing in the financial services in real estate. Fannie Mae, Freddie Mac. There's so many things that Warren Buffett is putting billions into where it's kind of comical when I hear him and hear people try to relate him and talk about, okay, well, if he's doing it, then obviously real estate is not stay. So real estate, it is the best investment. That is my opinion. And it's going to be subject to where I am in life, like I've said a million times. But real estate pays you 3 ways. Real estate is great during inflation. Real estate is one of the best things that you can do, that you can invest in. And quite frankly, no matter what you invest in, it's all about the research that you give in as well, right? If you're just investing and blindly, not knowing anything, you can invest in a bad stock, a bad company, and lose all that money, right? GameStop might be a great example. So, real estate versus stocks. I say real estate all day, every day, and I truly believe it's a no-brainer. But I'm 29, I like cash flow. I want to take advantage of my tax benefits, and I like to hold, right? I plan on building and holding for 10 to 15 years because that's where you're going to get the most benefits out of your real estate. Until next time, team. See ya.
Thanks for tuning into the podcast. I really hope you enjoyed. My goal with these podcasts is to help you get 1% better every single day. And if you enjoyed, please like and subscribe and go to my YouTube channel because I post real life deals and the ongoing things that I'm doing to let you know that I'm walking the talk and not just talking about it, not just yapping. So, hope to see you next week. Till next time.